Today, I'm breaking down the basics of credit cards and how to avoid falling into the debt trap. So, what's a credit card exactly? It's that little plastic card issued by a bank that lets you pay for things by borrowing money. In other words, it's a short-term loan. Here's the rundown on how credit cards work. First up, you apply, and if you're approved, you get a credit limit, the max amount you can borrow. Next is, you can use your card to buy stuff in stores, online, or even over the phone. At the end of each month, you get a statement showing your purchases, interest charges, and minimum payment due. And finally, you can pay the full balance, make the minimum payment, or something in between. But remember, if you don't pay it all off, you'll rack up interest on the remaining balance. There are different types of credit cards. Credit cards can be super beneficial. They offer convenience, rewards, emergency funds, and can help build your credit score. But beware, they can also lead to debt, high interest rates, fees, and even identity theft. Now let's talk. Using your credit card to get cash from an ATM or transferring money from your credit card account can be costly. There's usually a fee and interest charges start right away, so avoid this whenever possible. So how can you use credit cards responsibly? Remember, credit card debt can be super high, over 20% interest annually. If you only make minimum payments, it could take decades to pay off. One of my statements said it'd take 128 years. That's insane. Balance transfer cards. They might help temporarily, but they're just shifting the problem. Think of your credit card as cash, because that's what you'll need to repay the debt. Don't confuse credit cards with debit cards. They're not the same. Credit cards can be a powerful tool when used wisely. Understand them, follow best practices, and you'll enjoy their benefits without the pitfalls.